Dear students, we already completed one of the important topic, that is to find new P&L ratio. Yes. Now in this session, Goodwill. We already cleared a chapter named Valuation of Goodwill. But the word Goodwill is not enough up to that chapter only. It's not restricted. At the time of admission of a partner, Goodwill is treated in some different way. At the time of retirement or death of a partner, again Goodwill treated in some different way. At the time of merging, that is amalgamation or absorption, so many different circumstances are there, and in all that circumstances, Goodwill always act differently, always treated differently. Okay? Today, in this session, we are going to understand few important matters about accounting treatment of Goodwill. Now, first of all, listen carefully. As I said in my last lecture, it will work as per Accounting Standard 26. Okay? Now, one of the most important point. Here, in this chapter, at the time of admission, as I said, see what they said in textbook. Let's go through it first. 2-3 lines only. Okay? From the accounting point of view, Goodwill is a compensation for the profit sacrificed by old partners in favor of new partners. What does it mean? Goodwill is nothing else, compensation given by new partner for what? New partner is giving an additional amount. For what? For profit sacrificed by old partners. Okay? Naturally, whatever the new partner is going to get must be sacrificed by old partners. And so, new partner will bring an additional amount other than the capital, which is known as Goodwill. Because he is bringing additional amount, even it is known as premium for Goodwill. Okay, it is known as premium. Premium always says something more than the actual one. We are going to discuss this word premium in detail in the chapter of share capital. Okay, this word is very much famous in case of share bazaar. Yes, premium is add-on value than the face value of the share. But we will discuss later on. Here also, new partner is bringing more value than the capital. That's why that Goodwill is known as premium for Goodwill. Is that clear? First. Now, from my end, this is what we learned from bookish language. From my end, one more important topic. See, when new partner enter in the firm, already firm is doing a business, already it is having a good existence in the market. Okay? So naturally, that firm is already having a goodwill. That firm is already having a goodwill appeared in the balance sheet, because goodwill is an asset, it's an intangible asset, should be on the asset side of balance sheet under the title of non-current asset and subtitle intangible asset. Okay? So let's take an example. A and B, two partners, doing business since last 10 years. Now, they would like to admit C as a partner. They would like to admit C as a partner. Okay? Now, while admitting C, they are already having a goodwill in the books of account, that is in the balance sheet. So what about that goodwill? At the time of admission, suppose from 1st of April they are giving admission to C. But the goodwill appeared on the previous day, that is 31st March, already there in the book. I think you agree that that goodwill obviously is just and just due to efforts of A and B. And so that goodwill, known as old goodwill, must be distributed in old ratio between old partners. Okay? Again, do take care for the entire chapter, whether it's a short question or a long question. Whenever goodwill is already appeared in the books, known as old goodwill, must be distributed, we can say written off, must be distributed between old partners in old P&L ratio. Okay? Is that clear? Sure? Guarantee? Okay. Let's continue with the question. Okay, not the question. Instead of question, let's go first of all about the situation. Here, in goodwill, different situation of accounting treatment will be there. Different situation. Which are that? There are mainly 6 situations. 6 situations. Yes. First one, goodwill. See, we are going to talk about each and every one in detail. So do concentrate. Then we are just going to transfer that situation into numerical questions. Okay? So if you concentrate over here properly in this lecture, in this session, obviously the work becomes very, very, very easy for you when we are going to start solving practical questions, whether it's a short question or a long question. Okay? Now in this session, intentionally I did a question over here and theory over here. Do take care. Don't concentrate over here. This is the first topic. It's an experiment. Yes, whether you are concentrating over here while we are discussing this, or you are obviously concentrating in the discussion. And that's why I am here, just to cover this topic. Okay? Goodwill paid privately. What does it mean? What does it mean? Can write a bracket over here. That's why I put some place also. No accounting entry. Okay? A and B are partners. In every case, we are taking A and B are partners and we are admitting C. Okay? A and B are partners. They are admitting C as a new partner. Now, C decided to pay goodwill privately, personally to A and B. Now, you may consider, sir, is it legal? Yes, no problem. So it's a mutual coordinating efforts between partners. There is no concern with legality. Okay? So if A and B agrees, C also agrees to adjust the matter of goodwill out of the books of account. It's valid. Okay? So first circumstance, goodwill paid privately. No accounting entry will be there in the books of account. Why? Because they did all these adjustments out of the books of account, paid privately. Okay. Second, from second onwards, almost each and everyone important, not only important, even some of them interrelated also. Take care. Second one, goodwill brought in cash and retained in the business. Goodwill brought in cash. A and B are partners. Admitting C. C will bring 10,000 as goodwill. Acha, ratio. Old ratio 1:1. Okay? They are admitting C with 1/3 share. C bring rupees 10,000 in cash and retain in the business. They will not clarify these words. Okay? What are the differences? While calculating, while rather explaining this, I am telling you, don't worry. C will bring 10,000 in cash. Here, the first entry should be cash account debited to premium for goodwill account. Cash account debited to premium for goodwill account. Okay. Why? Because cash comes in the business. And second, that goodwill is to be retained in the business. What does it mean? That amount, cash retained in the business. We are keeping that cash in the business. Okay? So first entry, cash account debited to premium for goodwill. Second entry, premium for goodwill account debited 10,000 to A's capital account, 5,000 to B's capital account, 5,000, because all ratio is 1:1. Okay? So here again, very quickly, cash to premium for goodwill and premium for goodwill account debited to A's capital account to B's capital account. So net what happened in first entry? You credited premium for goodwill by 10,000. In second entry, you debited premium for goodwill by 10,000. So what happened? Premium for goodwill account squared off. Okay? So net effect will be cash account debited 10,000 to A's capital account to B's capital account. See, we are not going to do this net entry. We are going to do two entries. Okay, as I said just now, cash to premium for goodwill and premium for goodwill to A's capital to B's capital. Here, what I want to explain is cash comes in and distributed in partners. Cash goes out will not be there. Okay, that's why it is known as retained in the business. But again, let me tell you, they will not clarify these words. Okay, don't worry about it. You must understand that if no clarification of withdrawal, that means it is retained in the business. Okay, next, third one, almost similar, goodwill brought in cash, but the next, in second it was retained in the business. In third, and withdrawn by old partners. Okay, so this portion, goodwill brought in cash will remain same. So can I say the first entry will remain same? Cash account debited to premium for goodwill account. Okay. Even the second entry will remain same, because in second entry you have to distribute to partners. So premium for goodwill account debited, second entry, to A's capital account to B's capital account. Clear? This is second entry. Now, one more entry for this, withdrawn by partners. Okay? In first entry, cash comes in form of goodwill. In second entry, that amount is distributed between the partners, but amount of goodwill. Okay? Now in third entry, partner withdrawn cash. So the entry will be A's capital account debited, B's capital account debited to cash account. Now here you may feel, sir, is it not goodwill account credited? No. Why is it so? Because in first entry, premium for goodwill account credited. In second entry, premium for goodwill account debited. So we already squared off goodwill account. Is that clear? So net what happened? Cash account debit and partners capital credit. Now they have withdrawn that cash. It is reversed. So partners capital should be debited because partners personal account, they are receiver. Debit the receiver. Okay? And cash goes out. Real account. Debit what comes in, credit what goes out. Try to remember the old golden days of 11th. Yes, types of account and its rules. Okay, is that clear? So, in this you can say number of entries 3. Over here you can say for this 2 entries. Over here 3 entries. 1 more entry. Okay? The important is 2 or 3. This 2 will remain same. Plus 1. That is partners capital account debited to cash or bank account. Okay? Now an entirely a new topic. In first, paid privately. Best option. Not at all worrying about any of the entries. In second, yes, bring in cash and retained in the business. In third, again bring in cash but withdrawn by partners. But now, goodwill not bring in cash. A new partner will not bring goodwill in cash. Okay? Here, goodwill should be there. But he is not bringing in cash. Okay? You may not have that cash. See, it all depends upon their mutual conditions. We are least concerned with their problem. We have to concentrate in the details given in the question. And here they will not say that C will not bring goodwill in cash. Okay, if you are lucky enough, they will mention these words. But in majority of the case, they will not clarify this thing. See how the question will be. A and B are partners, sharing P&L in 1:1. They admitted C, I am talking for this, not bringing cash. They admitted C as a partner with 1/3 share. C bring capital rupees 80,000. Capital C is bringing. Now, what they said, firm's goodwill will be valued at 60,000 rupees. Firm's goodwill is valued at 60,000 rupees. This kind of words they will give. Okay? In these two circumstances, they will say C will bring rupees 80,000 as capital and 20,000 as goodwill. Clearly they mention bring in cash. But here C will bring 80,000 as capital. About goodwill, nothing. But the words given. Firm's goodwill is valued at 60,000. This kind of words will be given. Firm's goodwill is valued at. Okay. So here C's share is 1/3. So we have to decide. Out of total goodwill 60,000, what about C's share? That is 1/3. So 60,000 into 1/3, 20,000. Again take care. We can calculate goodwill on the basis of data. 60,000 into 1/3 does not mean that he is bringing cash. Okay? Here what to do? Listen carefully. Here what to do? First entry is of capital. Cash account debited to C's capital account. We are talking about fourth circumstance. First entry. Cash account debited to C's capital account. 80,000. Okay. Now about goodwill. C is not bringing anything. Clear? But the share of goodwill should be 20,000. 60,000 into 1/3. Is that clear? That amount is to be adjusted against C's capital. Against C's capital. So what will happen? We credited capital by 80,000. Now we deduct 20,000 out of it. Now we deduct 20,000, C's share of goodwill, out of it. So the second entry will be C's capital account debited 20,000 into bracket goodwill. Just to make it clear, brackets are always advisable. C's capital account debited 20,000 to A's capital account 10,000 to B's capital account 10,000, because that amount should be distributed between old partners in old ratio. Is it okay? So when new partner will not bring goodwill in cash, at that time always that amount of goodwill should be adjusted against new partner's capital. Is it okay? See, let me tell you one thing. Since last 3-4 years, I am observing one particular thing. While we are doing it for the first time, the topic of goodwill, especially in this chapter, that is admission of partner. While doing it for the first time, everyone feels it's easy. How do you? Yeah. But while starting long questions, some of them face this problem. And the remaining, see, out of 50 students, if 20 students are facing problem in goodwill, the remaining are not at all facing problem. Why? Because they are zero. They decided not to do anything about goodwill. Skip it. Why? Because in the initial stage they feel that it's easy, but they are not doing regular practice. For these questions, please do regular practice. Go through the question properly, understand the condition, which one out of this is given, and do entry accordingly. If you don't do proper practice, at the end, when we are going to start long questions, it's tough. Okay, you can understand which circumstance is that, because it's given in the question. If you understand that this is this circumstance, but what are the entries? You may not exactly knowing it. This type of things I experienced since last 3-4 years, even from brilliant students. At the end of the chapter, or say at the end of the session, not the lecture, but say at the end of completion of course, when I used to ask, what about the revision? Which chapter would you like to do first for the revision? Always I am getting the answer, admission of partner. Okay, chalo, admission of partner. Which topic? Sir, Goodwill. That shows that your goodwill will be zero at that time. So please take care. Do concentrate in this lecture. At the same time, when we are going to solve practical questions, short questions, do regular practice at least once in a day of all the sums of goodwill. At the end of say all 6 methods, you will have 13 questions of goodwill given in the exercise. So at the end of it, supposing after 3 lectures we completed 7 questions. So in that day, you should go through all 7 questions. In 4th session of Goodwill, we added another 2, 8 and 9. So in that day, you must go through all 9 questions. Because this kind of things, you have to do it for 3-4 days only. But it will give you a confidence that yes, in Goodwill, I can do very easily. Otherwise, definitely it will create a problem. Okay? So when Goodwill is not bringing cash by new partner, always it should be adjusted against his capital account. Next one, Goodwill partly bringing cash. Here not bringing cash, here partly bringing cash. So can say combination of this method and this method. Here bringing cash, here not bringing cash. So partly bringing cash means combination. Again, let's take an example. See, it's easy, huh? You can note it down in your rough book. Because for all that, we are going to solve practical questions. Don't worry. Clear? Let's continue. A and B are partners. Equal ratio. Admitting C as 1/3 partner. Okay, 1/3 share. C will bring 80,000 as capital. The similar one, huh? And C will bring 80,000 as capital and 16,000 as his share of goodwill. 16,000 as his share of goodwill. Now till this moment what we feel? Goodwill bring in cash. But further they said firm's goodwill is valued at 60,000, 60. Firm's goodwill is valued at 60,000. Now here the problem starts. What amount of goodwill brought in cash by C? 16,000. And firm's goodwill is 60,000. C's share 1/3. So if we calculate 60,000 into 1/3, the answer will be 20,000. What does it mean? The new partner should bring rupees 20,000 as goodwill, but he brought 16,000. Partly. Okay? Actual amount he should bring is 20,000, but he brought only 16,000. Is that clear? Sure? Here in this case, remaining 4,000 should be taken from his capital account. The entry will be like this. Listen carefully. It's just oral examples. The same we are going to solve. The same we are going to have in practical questions. But if you concentrate at present, the work becomes easier for you. First entry. Cash account debited 96,000. Cash account debited 96,000. Why? Because 80,000 of capital, 16,000 of goodwill. Total cash brought in by C is 96,000. So cash account debited 96,000. To C's capital account 80,000. To goodwill, premium for goodwill account 16,000. Again, cash account debited 96,000. To C's capital account 80,000. To premium for goodwill account 16,000. Now, total 20,000 should be distributed between old partners. So second entry, premium for goodwill account debited 16,000. C's capital, the remaining amount 4,000 should be adjusted against C's capital. So C's capital account debited 4,000, premium for goodwill 16,000 debit, C's capital 4,000 debit, total 20. To A's capital account 10,000 because equal ratio. To B's capital account 10,000. Is it okay? Partly bring in cash. Clear? Next, sixth, valuation of goodwill is made on the basis of partners' capital. Here they are not going to give even a single word out of this entire sentence. Okay? That's why it is known as hidden goodwill. It is known as hidden goodwill. Okay? Is that clear? Not clear? Naturally, I have not explained anything. We are not going to discuss anything about this at present because it is hidden. We will find it out and then we will discuss. Joke apart, it's a fact. While doing practical question, I am going to explain this because it's a lengthy explanation, not solution. Explanation wise, it's lengthy. For you, it is tough to remember at present. Clear? So we are not discussing. You have to remember only one thing. Hidden goodwill is also possible. Okay? In which kind of circumstance, how can we find that it's a hidden goodwill? That I will explain. Don't worry, I am there with you always. Okay? Now, let's go for the practical questions after this theory. First one, goodwill paid privately. Okay? Here, when goodwill paid privately by new partner. Exercise 4, question number 1. As usual, as per our system, let's go through the question first. Let's go through the question first. A and B are the partners sharing profit and loss in the ratio of 3:2. So here I write odd ratio 3:2. Next, they admitted C as a partner for 1/5 share of profit. C's share 1/5. C brings 80,000 as his capital in cash. C is capital, 80,000. Now important. C gave his share of goodwill personally to A and B. Personally to A and B, paid privately. We are not going to write in steps naturally because he is paying personally, so no accounting entry for that goodwill. That's why even the amount of goodwill is not given. What C is paying, but something else is given. There was a balance of goodwill rupees 25,000. There was a balance of goodwill rupees 25,000 in the books of firm before C's admission. Again listen carefully. There was a balance of rupees 25,000 in the books of firm before C's admission. So old goodwill is 25,000. Is that clear? These are the steps. Now, journal entries in the books of firm. The title, then date, particulars, ledger folio number, debit amount, credit amount. Very, very simple. First entry, cash, or because okay, C is not bringing goodwill in cash, paying privately, but C is bringing capital in cash. So we have to pass an entry for that. Cash or bank account debited because cash comes in. C is the giver, personal account. Debit the receiver, credit the giver. So cash or bank account debited to C is capital account. 80,000 amount of capital. Is there any problem? Sure? Okay. Now second entry for old goodwill. Clear? Old goodwill is already there in the books. It is already there in the books. Worth rupees 25,000. At the time of admission of C, we have to write off between old partners. Goodwill written off. Okay, and always in old ratio. Clear? The entry. Goodwill account debited to A's capital account to B's capital account. Ratio is 3:2. 25,000 distributed in 3:2. So the amount of A 15,000 and of B 10,000. Is there any problem? Is there any problem? Being goodwill written off in old P&L ratio. Any question? Sure? No question? Are you sure? Now let me tell you. You must have a question. You must have a doubt. If you are not having any doubt, that means you are accepting everything, whether it is correct or wrong. See, in the initial phase of this lecture, I already said that I did some experiments. Here, when I am saying we are writing off old goodwill, still not getting any clue? Okay, goodwill already appeared in the books. To shun? What do you mean by to shun? When goodwill is appeared in the books, it is always having debit balance up. Because goodwill is always an asset. Okay? Goodwill must have debit balance. Yes, then? What is then? In that case, this entire entry is wrong. Goodwill having debit balance, if we want to cancel it, if we want to write off it, it must be credited. Here I debited it. See, I did it intentionally, whether you are concentrating in the concept or not. If you say, sir, we are doing it for the first time, no. You know that goodwill is an asset. You know that asset always having debit balance. And I use 3-4 times, we are writing off goodwill. If we are cancelling, written off means cancel. If we are cancelling a debit balance, it must have credit effect. Okay? Please do concentrate. I am going to do so many experiments. Though I have to cancel everything over here, I am ready to do. But I will not allow you to sit just SAE with cool and calm mind and not doing anything. Take care. Even the amount is correct, but capital account should be debited and goodwill must be credited. So here the entry. This is perfect. That's why I write this very nicely. Written off. The entry should be is capital account debited, B is capital account debited to goodwill account. Here debited in 3:2, so 15,000, 10,000 to goodwill account 25,000. Now this is the correct entry. See, you know me very well, and if you don't know, then also it's okay. But you must know the concept perfectly. Goodwill is always an asset, always having debit balance, and when we are writing off any of the debit balance, naturally it must be credited. Okay? So now this is the perfect entry. Now here see what happened. There are students, definitely some of you are just writing it from the board, from the lecture, you are just copying the things. In that case, definitely you are using some special words for me because you also made some corrections. But it's not my fault. Mind well. You must understand the concept. You should raise a question. Sir, if goodwill is having a debit balance, how can you debit it again to write it off? Yeah. If you are having that question in your mind, appreciate yourself. Because through this media, through this way, one way education, I cannot appreciate. And so I am saying you must appreciate yourself. But or else you must criticize yourself. That, oh, come on, even we don't know that goodwill should have debit balance and it must be credited while writing it off. When sir is using this word written off, sir is using this word for 3-4 times, still we are accepting a wrong entry. It's not fair. It's not fair. Okay? This is the perfect entry. A is capital account debited. B is capital account debited to goodwill account. See, here we are not using premium for goodwill. Because premium for goodwill word will be used only for goodwill bringing cash by new partner. Because he is bringing something more than the capital. So it is known as premium for goodwill. Here we are normally not using the word premium for goodwill. Is it okay? This was question 4, exercise question number 4, and in that it was first question, sub question 1. Okay, it was as per the first condition, that is goodwill paid privately. Now, second condition onwards, we are going to solve. In next section, we will not have much of theories from next section onwards. Directly we are going to switch on this, then this, and likewise. Okay, you are having almost 13 questions. One we already completed. So remaining 12 questions are distributed in these methods. So definitely you are having more than one question for each method. Okay, so can do practice also. At the same time you have so many illustrations too. Is that clear? But on the basis of this experience, take care. You must concentrate with your full conceptual clarity. In that way, if you are having any doubt, any question, any confusion, always can ask freely with a smiling face. Yes, we are always with you if you are having any doubt. Okay, so till next session, do practice of goodwill, clear the concept to enhance your goodwill in our mind. Till then, take care of yourself, stay safe, stay happy.